Welcome back to Insights to Opportunity. One of the major challenges small businesses face is the lack of capital. Our next guest is the best-kept secret in Houston, Marlon Mitchell, President and CEO of Houston Business Development, Inc. HBDI is a non-for-profit organization designed to help small businesses that need help when a bank may not be able to. Marlon, I want to thank you for coming to the show today.
Thank you for having me.
So tell us a little bit more about HBDI, or Houston Business Development, Inc.
It's a nonprofit corporation that was established back in 1986 by the city of Houston, in fact. If you'll recall, Houston back in 1986 was at the peak of economic recession. So a lot of small businesses weren't able to access traditional sources of capital. And the city decided that they wanted to create a revolving loan fund to be able to assist small businesses, particularly those that were operating in underserved communities that didn't have access to capital. So we were born, if you will, in 1986. We've sort of evolved since then, spun off from the city in 1993 and became a separate 501c3. And our mission is to help stimulate growth, revitalize communities, and create jobs, and a supporting, nurturing environment for small businesses.
Well, no, I mean, that sounds like a lot. So let's just get right into it. What does that mean? You're stimulating growth for small businesses. You got money?
Yes, we do. And that's one of the things that we want to try to change, this best-kept secret notion, and let people know that we're a resource that's available. When banks say no, we can say yes. We can make loans anywhere from as small as $5,000 up to as much as $5 million in a program that's affiliated with the SBA. The 504 program. But our purpose is to stimulate growth, and the way that we do that is we make expansion capital available to small businesses that might not otherwise be available from the private sector. Those businesses grow and expand and create jobs.
Absolutely. So you've got these loans for businesses. I mean, does it take a day, a year, a month? So talk about the different types of loans and how long it takes a business who's...
Yeah, we can make loans anywhere from $5,000, as I said, up to $500,000 under what we call a revolving loan fund. And we have different types of programs, different tiers. A fast track program, for example, is an expedited process, as the name would suggest, fast track. We can process that loan in 3 days. So somebody comes in on a Monday, they'll have financing by Wednesday. It's typically for working capital, for furniture and fixtures. It's designed to replace the high interest rate credit cards that people have a tendency to want to use. We also have a small business loan where we can make loans anywhere up to $500,000 for working capital, furniture, fixtures, equipment, real estate. Very attractive interest rates, very attractive terms. And that's another difference between our organization and a local lending institution, is that we're more flexible in terms of how we structure deals. And then we have what we call the SBA 504 program, which is designed for businesses that are owner-occupied, that want to purchase real estate or heavy equipment. We can lend up to as much as $5 million anywhere in the state of Texas.
No, I mean, that sounds great. Now, one of, small businesses, they go through a lot of trials and tribulations just in the nature of doing business, and oftentimes their credit is not what it should be.
Yes.
So is there any advice that you can give to businesses? Is there just something that makes HBDI different than a bank? Well,
again, we are different from a bank. All banks will look at the proverbial 5 C's of credit: cash flow, collateral, credit, conditions, as well as capital. And rather than try to elaborate on each of those, one of the most important factors is character. And so we look at the character of individuals. If we can get comfortable with who you are, how you handle your trade obligations, your credit, then chances are we can work with you. Even though you may not have a stellar credit history, if we can get an explanation as to what may have caused that, if there are blemishes, if we can get comfortable with that, then we can still work with you. We'll look at all of those C's, but we'll look at each one and weight them.
So you look at all the C's, and so in some cases, do you have similar structures to a bank? Do you have to put up capital? Or?
Yes, very similar to a bank. We're no different from a bank in terms of how we underwrite. We're going to look at your debt-to-worth ratios, your debt-to-income ratios, debt coverage ratios. We'll look at all of that. But at the same time, we're a little bit more flexible in terms of how we underwrite. We're not regulated by the Federal Reserve or by the OCC, the Office of the Comptroller of Currency, or the FDIC. We're a non-bank lending institution in that we don't take deposits. Our funding comes through the City of Houston, in part, also funds that we generate internally, and then other organizations, other nonprofits, foundations, and what have you.
Now, do you work with banks? I mean, since you're a non-bank technically, is there sometimes that you refer your clients to banks, or do you have some type of partnerships with banks?
Yes, we work very closely with banks. Most of the regional banks as well as community banks we have a relationship with in doing what we call a tandem loan or a companion loan. Someone goes to a bank and the bank looks at it and they just can't get comfortable. It's marginal. And so we help mitigate the risk that that bank might see in that transaction by taking a second lien on collateral, by reducing the interest rate on the loan on our portion. It increases the cash flow of that business. So what we try to do is to make sure that that business is a viable business. And if we can mitigate the risk that the bank sees in the transaction, that borrower can still access the amount of capital that they need. So we work with banks in tandem loans. We work with them through the SBA 504. That program requires a 50-40-10 split. 50% provided by the bank, 40% provided by ourselves, and 10% by the entrepreneur.
Okay.
We don't compete with banks. Our role is to try to work with those businesses that banks have typically found difficult to work with, and then mitigate the risk that the banks have in those marginal transactions.
Now, you know, you're saying, you know, a lot, and it still might sound a little intimidating for a
Sure.
small business owner. So talk about, I think it would be helpful to talk about some of the businesses that you've helped, unlikely scenarios, or folks who might have not thought that they were, you know, they were able to get a loan.
Sure.
Can you give some examples?
Typically banks have industries that they're more prone to make loans within. Restaurants being one that they typically shy away from. But if you look at our portfolio, we probably have 33% of our overall portfolio in restaurants. So we make a number of restaurant loans and those loans that banks will find difficult. Startup businesses. Typically you won't find a bank that will make a startup loan, but we'll make a startup loan if someone has a detailed business plan, relevant industry experience, and as well as up to 33% of the capital that they can invest in that business. And so again, where you find that the deals may be difficult for a bank, we typically will come in and work with that small business.
Now, can you give any advice to a small business before they come into HPDI for services? What do they need to just get started?
Well, probably one of the most important things is your credit. You can actually go to annualcreditreport.com and pull a credit report from each of the reporting bureaus. And that's something that I would advise. Know what your credit is and then address the different blemishes or any concerns that you might have beforehand. And then when you bring a package, make sure that that package is detailed. Most lenders have to take 30 or more days to actually package a deal and take that time in underwriting because it's piecemeal rather than bringing a complete detailed package where the T's have been crossed and the I's have been dotted.
Thank you so much, Mr. Mitchell, for coming to the show and sharing HPDI services.
Thank you so much for having me.
Coming up next, we're going to put the proof where the pudding is. We're going to have one of HPDI's success story and a recipient of an HPDI loan.